Hello and welcome back to the channel. In today's video, we're going to talk about something that's critical for your financial future: investment. Specifically, we'll dive into what investment is, why it's so important, and how it contributes to your financial growth. If you've ever heard people talk about building wealth and thought to yourself, how do I get started? This video is for you. Investing isn't just for the rich or financial experts. It's something everyone can do, regardless of your income. In fact, investment is one of the most powerful tools available for creating long-term financial security and independence. By the end of this video, you'll have a solid understanding of what investment is, why it's important, and how it can be used to grow your money. I'll also share practical steps you can take to start investing, no matter where you are in your financial journey. Whether you're just getting started or looking to refine your investment strategy, this video will provide you with valuable insights to help you build a stronger financial future. So let's dive in and break down everything you need to know about investment and why it should be a priority in your financial plan. To understand why investment is important, we first need to define investment. Investment, in the simplest terms, is the act of committing money to something with the expectation of gaining profit or income. It's about putting your money to work rather than letting it sit idle. While savings accounts are a form of storing money, they don't offer growth. Investment is what helps you grow your wealth over time. There are many different types of investments, but the primary goal is the same: to make money grow. Common types of investments include stocks. Buying shares in a company allows you to own part of it. As the company grows and becomes more profitable, the value of your stocks may increase, and you can sell them for a profit. Bonds. Bonds are loans you give to governments or corporations. In exchange for your money, they promise to pay you back with interest over time. Real estate. Investing in property, whether residential or commercial, can offer long-term returns through rental income or the appreciation of the property's value. Mutual funds and ETFs. These are collections of various investments such as stocks and bonds, which help spread out risk. They're perfect for people who want a diversified investment strategy without having to pick individual stocks themselves. Cryptocurrency. A newer and more volatile form of investment, cryptocurrencies like Bitcoin and Ethereum have gained popularity in recent years. However, they come with high risk and can fluctuate wildly. When you make an investment, you're essentially purchasing an asset that you believe will increase in value over time. As your investments grow, they generate returns. There are two primary ways you can earn from investments: capital gains. This is when the value of the investment increases and you can sell it for more than what you paid. Income. Some investments, like dividends from stocks or rental income from real estate, provide a steady stream of income. The key to successful investing is understanding the balance between risk and reward. Generally, the higher the potential return, the higher the risk. But when managed wisely, investments can yield substantial profits over time. Now that we understand what investment is, let's talk about why it's important. Why should you, as an individual, prioritize investing? The primary reason people invest is to build wealth. Without investing, it can be extremely difficult to grow your money at a pace that outpaces inflation, which slowly erodes the value of your money. For example, if you save $100 today and put it in a savings account with a 0.5% interest rate, after 1 year you'll have $100.50, but the purchasing power of that $100 may have decreased due to inflation. On the other hand, Investing gives your money the opportunity to grow. Over time, the value of your investments can increase substantially, providing the kind of returns that savings accounts simply can't match. For instance, historical data suggests that the average stock market return is around 7% per year after adjusting for inflation. One of the long-term benefits of investing is that it can help you achieve financial independence. This means having enough wealth to cover your living expenses without relying on a job or active work. Cryptocurrency, such as Bitcoin, Ethereum, and other digital currencies, has become an increasingly popular investment choice in recent years. Cryptocurrencies are highly speculative and volatile, with the potential for substantial gains or losses. While some investors see cryptocurrency as the future of money, others view it as too risky. If you decide to invest in cryptocurrency, make sure to do thorough research and understand the risks involved. Now that we've discussed the different types of investments, let's talk about how to actually start investing. Before you start investing, it's important to set clear financial goals. Ask yourself questions like, what am I investing for? Retirement, buying a house, building wealth. How long do I plan to invest? Short-term versus long-term goals. What level of risk am I willing to take? Setting specific, measurable goals helps you stay focused and create a strategy that aligns with your needs. To invest successfully, you need to have some savings. That's why creating a budget is essential. Make sure you're living within your means and setting aside money for investments. A general rule is to save and invest at least 20% of your income. If you're new to investing, start small. Don't feel the need to invest large sums of money right away. Many brokers and investment platforms allow you to start with as little as $50 or $100. Starting small will allow you to learn about the markets without risking too much. There are many platforms available for investing, from traditional brokers to newer apps like Robinhood, eStarTrade, and Fidelity. Choose a platform that aligns with your needs, offers low fees, and provides the types of investments you want to make. As mentioned earlier, diversification is key to managing risk. Don't put all your eggs in one basket. Spread your investments across different types of assets and industries. Investing is not a get-rich-quick scheme. The key to success is consistency. Invest regularly, stick to your plan, and resist the urge to panic during market fluctuations. Over time, your investments will grow and you'll move closer to your financial goals. To conclude, investing is one of the most important steps you can take toward financial growth and security. Whether you're building wealth, saving for retirement, or simply looking to beat inflation, investing is a key strategy to achieve your financial goals. Remember, the earlier you start investing, the more time your money has to grow. Don't be intimidated by the different types of investments. Just start with what you're comfortable with and build from there. Keep learning, stay disciplined, and over time, you'll see the benefits of your investments. I hope this video has helped you understand the importance of investment and given you the tools to start. If you found it useful, don't forget to like, share, and subscribe for more financial tips. Thanks for watching, and I'll see you in the next video. Now that we've covered why investing is important, let's look at the different types of investments you can consider to grow your wealth. Stocks represent a share of ownership in a company. When you buy a stock, you become a partial owner of that company. As the company grows and becomes more profitable, the value of its stock generally rises. You can make money from stocks through capital gains, selling the stock at a higher price than you paid, or dividends, regular payments made to shareholders. Stocks can be volatile in the short term, but tend to grow significantly over the long term. They are often considered an essential part of a diversified investment portfolio. Bonds are a form of debt investment. When you buy a bond, you're essentially lending money to a government or corporation in exchange for interest payments over a set period. After the bond matures, the principal is repaid to you. Bonds are considered lower risk investments compared to stocks, but their returns are also generally lower. They are a good option for conservative investors who want a stable source of income. Mutual funds and exchange-traded funds, ETFs, allow you to invest in a diversified portfolio of assets, including stocks, bonds, and other securities. The main difference between the two is that mutual funds are actively managed by a fund manager, while ETFs typically track an index or sector passively. Both are excellent options for investors who want diversification but don't have the time or expertise to manage their individual investments. Investing in real estate involves purchasing property, whether residential or commercial, with the expectation that it will appreciate over time. In addition to appreciation, real estate can generate passive income through rental income. Real estate is a tangible investment, meaning it has intrinsic value that is less likely to fluctuate as much as stocks or bonds. However, real estate also requires a larger initial investment and carries risks such as market downturns and property damage. The earlier you start investing, the more time your money has to grow. This concept is called compound interest, where the returns on your investment generate earnings that are then reinvested to earn even more. Albert Einstein famously referred to compound interest as the eighth wonder of the world because of its power to turn small amounts of money into large sums over time. Investing is also crucial for retirement savings. The government-run Social Security programs like Social Security in the United States are unlikely to provide enough for you to live comfortably in retirement. This is why it's so important to start investing for retirement early. There are many ways to invest for retirement, including 401k plans, IRAs, individual retirement accounts, and other retirement-specific accounts. These accounts are designed to grow your money over time with tax advantages, meaning the money you invest now will compound and grow tax-free or tax-deferred, depending on the type of account. Inflation is the rate at which the general level of prices for goods and services rises, eroding purchasing power. For example, a $1,000 that you have today will not buy the same amount of goods or services in 10 years if inflation rises by 2% annually. Investing helps beat inflation by growing the value of your money faster than inflation is eroding it. This is one of the key reasons why simply saving money in a bank account isn't enough to secure your financial future. By investing, you are ensuring your purchasing power remains intact as prices increase. Another important reason to invest is diversification. Diversification means spreading your investments across different asset types, industries, and regions to reduce the risk of losing everything if one part of the market takes a downturn. If you only have one investment, such as your savings in a bank account or a single stock, you're putting all your eggs in one basket. When you diversify your investments, you protect yourself from the volatility of any single investment, and you increase your chances of making gains in different areas. For example, if one stock underperforms, another asset in your portfolio might be doing better, compensating for the loss. Investing also provides the opportunity to earn passive income, which is money you earn without actively working for it. For example, dividends from stocks, rental income from property, or interest from bonds are all forms of passive income that can supplement your active income and improve your financial situation. The more passive income streams you have, the more financial freedom you achieve. With a well-balanced investment portfolio, you can create a consistent cash flow that allows you to live comfortably even if you're not actively working.